Hey everyone, welcome back to Corporate Decoder. Today we are diving into the world of Tenon Medical, and let me tell you, this report is like a roller coaster. We will try to figure out if they are going uphill or downhill based on this 8K filing. Ready to find out if this company is on the mend or if it is just a medical mystery. So on March 25, 2025, Tenon Medical, a company you may or may not have heard of, filed a report basically saying they made a deal to sell some of their stock. Think of it like they needed some quick cash, so they decided to put some shares on the market. The report is called an 8K, which is basically the SEC's version of breaking news. Here is the gist. Tenon Medical made a deal with an institutional investor, which is basically a fancy term for a big company that invests money like a pension fund or an insurance company. They agreed to sell them shares of stock and some other financial instruments called warrants. Think of warrants as coupons that allow you to buy stock later at a set price. There were two parts to this deal, a registered direct offering and a concurrent private placement. The direct offering means they were selling some other shares and warrants on the side in a deal not open to the general public. They are selling shares that are not registered under the Securities and Exchange Commission or SEC. The private placement means they were selling some other shares and warrants on the side in a deal not open to the general public. They are selling shares that are not registered under the Securities and Exchange Commission or SEC. The private placement means they were selling some other shares and warrants on the side in a deal not open to the general public. They are selling shares that are not registered under the Securities and Exchange Commission or SEC. The private placement. Together, these two sales are called the offerings, and Tenon expected to get about $224 million before paying fees. That sounds like a lot, but for a company, it might just be enough to keep the lights on for a few months. The shares and some of those warrants we talked about are being sold under a registration statement, kind of like a permission slip that was already approved by the SEC a couple of years ago on May 17, 2023. This just makes it easier for them to sell these stocks when they need to. Those common warrants that we mentioned are basically coupons for shares, and these coupons will expire 5 years from when they were issued. That means the investor has 5 years to use them and buy the shares at the agreed price. Tenon Medical promised that for 60 days after some paperwork is done, they wouldn't sell any more shares or similar products. This is a pretty standard move to keep the value of the existing shares from dropping too quickly. But they also said that for the first 15 days, they were still allowed to do at-the-market offerings, whatever that means. AGPIS Alliance Global Partners was the placement agent. It's their job to find buyers for these shares. And for doing that, they are getting a fee. 7% of the money Tenon Medical makes from the sale and up to $50,000 to cover their expenses. So if Tenon sells shares for $254 million, the placement agent gets about $177, $77, $170, to cover their expenses. So if Tenon sells shares for $2,550,000 to cover their expenses. So if Tenon sells shares for $27, $8K27 to cover their expenses. So if here is a little extra deal if AGP introduces Tenon to someone who ends up buying more shares within 6 months. AGP gets another cut. It's like a finder's fee on top of the original commission. Tenon needs to register the shares that could be bought with those warrants so the investors can sell them later. They promise to do this pretty quickly within 30 days and to keep that registration active until the investors are done with the warrants. If you are super into legal documents, you can find all the details in the exhibits attached to this report, including the agreements, the forms for the warrants, and even a legal opinion about the shares. The disclosure regarding the common warrants and the common warrant shares is mentioned again, stating that these shares and warrants are not registered with the SEC and are sold under specific exceptions in the law. Finally, on that same day, March 25, 2025, Tenon put out a press release to tell everyone that they were selling these shares. There's also an opinion from a law firm, Sacenzia Ross Ference Carmel, basically saying the shares being sold are legal and valid. So let's put this all together. Tenon Medical needed money, so they sold shares and warrants to an institutional investor. They got about 2.5 forcing 44 mil each cash to keep going. It could also mean they are raising money to invest in something new, like research or expanding the business. Without digging deeper into the company's financials, it's hard to say for sure. And that needs cash to keep going. It could also mean they are raising money to invest in something new, like research or expanding the business. Without digging deeper into the company's financials, it's hard to say for sure. The fact that they are selling shares instead of, say, taking out a loan might suggest that they couldn't get a good loan deal, or that they didn't want to add debt to their books. Selling shares is like giving away a piece of the company, so it's not always the best option, but sometimes it's the only option. From just reading this report, it is really tough to tell if Tenon Medical is strong or weak. They are selling stock to raise money, which could be a good or bad sign. The deals with the placement agent and the warrants add some complexity. We would need to dig into their full financial reports to really understand what's going on. Thanks for watching. If you found this breakdown helpful, please hit the like button, leave a comment and subscribe for more corporate decoder videos. It really helps us to keep decoding.